As the saying goes, sell in May and go away, but remember, come back in September. And unfortunately, that has been the case quite often in the past. We've seen this example many times, and now, of course, the question is it going to be the same this time? A lot of people are expecting some kind of summer slump, but at the moment, it really doesn't look like that's happening. And I already made a video about this for you guys the other day. It's extremely crucial for a summer slump, how the initial part of the year went beforehand. And this year, things are just a bit different, because just look at it. The first 4 months of this quarter didn't go well at all. And as a result, you can't really apply those old sayings directly. Accordingly, something has changed here, and that means we still have a chance to see an increase. And last time I showed you this. If the S&P 500 performs poorly at the beginning of the year, it doesn't have to be a summer slump. That was in 2018 during the bull run when Donald Trump was already president and when there were also tariffs. And that's the situation today. It looks like we're really following the same pattern as in 2018. At the beginning of this year, the S&P 500 really didn't have a good start. But as a result, we now have the chance to see a nice summer for the S&P 500. And back then, we actually went through everything without any further correction until almost the end of the year. That means it could be the same this time, since the start of the year didn't go particularly well. Also, when looking at Bitcoin dominance excluding stablecoins, we had a good summer for altcoins back then as well, with a drop in Bitcoin dominance. Nevertheless, I think we will see a summer correction, because here is the M2 money supply and here is the Bitcoin price. Right now, the Bitcoin price is following the M2 money supply perfectly. But as you can see for yourselves, we've already had a larger correction here. This larger correction is not just this small mid-level correction here. No, this could be a correction in Bitcoin of 20 to 35%. And that's why I also expect a smaller correction in Bitcoin at some point in the summer, an interim correction of around 30%. But that won't be the end of the world. It could even happen quite quickly. Because if we compare the whole thing with the 2017 bull run, and so far we're really following the 2017 bull run almost identically. We can see that we built up nicely here, but in June and July we had a correction. Let's take a look at it of nearly 40%. Of course, back then we were smaller, that's why we had more drastic corrections. But even back then in the summer, although it felt like we were moving in a straight line, we still had another smaller interim correction. It's very important to understand this, because corrections are important too. However, I don't expect this correction just yet. I think we won't see it in the next 1.5 months, because just look at what's still ahead of us. We should actually still see a really big breakout in Bitcoin, just based on the M2 money supply. And also on this basis alone. Every time we test the 50 EMA, we experience a really strong upward trend. We've tested it and are already experiencing a strong upward trend right now. This upward trend should definitely get even bigger and should continue. It's exactly the same on the daily chart. We have a golden cross here, and normally this golden cross leads to us seeing another strong upward trend. Take a look at it. We had a golden cross here. Back then, in the last cycle, that's even when the bull run started. I mean, here we had a golden cross and first saw a really strong upward trend. That means in the next few weeks, I don't expect that yet, because we're still seeing a lot of liquidity coming into the markets. And because the signs are clear, that we first need an upward trend. And for that, we can simply take a look at the Bitcoin ETFs. Right now, we're still seeing huge inflows. Usually when the inflows stop, that's when we can see a correction. But the inflows are not stopping yet. We're also not in the overheated zone yet, even when it comes to the funding rate. Accordingly, I definitely expect some good months ahead, but I also expect at some point this summer an interim correction of 30%. This correction could come at the end of July or in August, and after that, things might continue upward again. That's my estimate. And if we compare the whole thing with the M2 money supply, it could happen around August. I'm keeping an eye on all of this because I also see a major risk when it comes to this topic. Specifically, Japan's 40-year government bonds have risen to 3.44, and that's really bad. That only happens when investors are expecting a huge crash, when investors are feeling uncertain. The problem here is that Japan has an enormous national debt of over 250% of its GDP, and they simply need cheap debt to keep all of this running. However, these high government bonds could now lead to us seeing a bigger crash in Japan. Japan is really in a dilemma right now, and from a global economic perspective, this could definitely have a huge impact. Because Japan is generally very high up in terms of the world economy. They are extremely modern. I mean, just look at the cities. The cities are already much, much more modern than here in Germany. Accordingly, their economy has also become extremely large, and a collapse there could really become dangerous. So you should definitely keep an eye on what's happening in Japan. And believe me, this is no small matter. I've read several times, oh, who even cares about Japan? Trust me. Japan has become so large in terms of the global economy that if we see a collapse there, it would drag down all the markets. We also currently have a major problem here that is really being downplayed. Take a look at this. Who is currently buying stocks? Who is actually making sure that the stock markets are rising right now? Since the beginning of the year, over $122 billion in ETF inflows have come solely from retail investors. And what's interesting is that JP Morgan itself says that most major investors, banks, or hedge fund managers have more or less actually pulled out their positions here, while it's the retail investors who are currently driving the market up. And that's where I see the big problem, because retail investors have never been right before. Or rather, it has to be said that if the big players like JP Morgan, Goldman Sachs, and the like haven't accumulated here yet, they won't allow the market to just keep running up. They will make sure that we come back down again. Because never in history has retail ever outpaced the hedge fund managers. The problem, however, is that we are now living in a different era. People are simply buying every dip. Retail investors have gotten smarter, and as a result, these markets are going to need a complete reset at some point. Here's another chart from JP Morgan. And right now, retail investors are buying 3 times more than the average of the past 10 years. You can see for yourself which direction this is heading. This is really crazy. Retail investors are currently very active in buying, and they're truly the reason why stocks are so high right now. Yesterday, JP Morgan published something else as well. Just yesterday, from 9:30 to 12:33, there were net inflows of $4.1 billion into US stocks. And these inflows came from retail investors. Right now, it's really a crazy time, and these are things we definitely haven't seen in previous years. You can see for yourselves how high it is now. It has never been this high before. Retail investors have never been this active in this market as they are right now. Retail investors have pushed this market upwards. And that worries me, because as I said, if the big players aren't in the market yet, they'll make sure it comes down again so they can buy in at better prices. Because it's impossible for retail investors to outrun the big investors. That's impossible. That has never happened before. And that worries me a little. That's why I can imagine that we could definitely see a fundamental correction in the crypto markets. And in the traditional markets, as I said, based on past patterns, we actually shouldn't see another summer like that. In fact, we could push through here. If you compare the whole thing, for example, with 2018, even just comparing the indicators with each other, things currently look rather bullish. The M2 money supply also looks good. We continue to rise, but in July or August, there could be a minor interim correction. Because as I said, the M2 money supply has also experienced a correction. And of course, we will see this correction reflected here in the crypto market as well. Because things are going to get interesting between July and August. At the beginning of July, we see that the 90-day tariff pause by the USA will be lifted. Then new negotiations will take place, and on August 12th, the 90-day tariff pause with China will end, since that was established a bit later. And that's going to be interesting. During this period, around July and August, I could imagine that Trump might pull a few stunts again and maybe manipulate things a bit so that afterwards we see the next upward trend. That's just how I could picture it, just based on a gut feeling. No idea. Because when the tariff pause is lifted, Trump will surely, as we know him, pull a few more tricks and stunts. Otherwise, in the long term, I'm optimistic. But I could imagine a minor summer correction, though, as I said, I expected more in July or August. And it's also possible that this correction only lasts a few weeks, 2, 3, 4, maybe 5 weeks. In the long term, we remain positive because the foundation is getting better every day.